No intro, no outro, straight fire. Let's get into these charts. So it is now Friday, 3:01 p.m. Central Time. The market is coming to a close, and probably by the time you see this video, it's going to be Sunday. So with that being said, I'm trying to stay consistent with doing my weekly additional video. So here it is. So the title of this video is New York Session Close Strategy Explained. So my 5 p.m. bias, my simple Forex model of how I trade. And again, I know a lot of people are like, why are you exposing how you trade on the internet? I realize that you can bring the horse to the water, but you can't force it to drink. You can literally tell people how you trade over and over and over again, and they probably still will never do your strategy. It doesn't matter to me. One, two, people are greedy, so they're probably going to find a cheat code to the cheat code. And three, I just don't care. It's enough money to go around. One person, little old me, is not enough to throw off the algorithm. That's how I see it. So there it is. Boom. Right? So pretty much want to break down today my New York session closing strategy, which is the 5 p.m. bias. So for me, this is one of the easiest ways to stop over trading, stop guessing, and pretty much start letting the market show its hand, because the daily candle close at 5 p.m. New York time is a big deal for Forex. Now, if you trade options and all that other stuff, I don't know what to tell you. I just know this works for Forex. The way I trade, I am a volume-based trader. I like liquidity pools into volume. So volume is my thing. All right. So if you've been getting chopped up during the day, entering too early, or getting faked out, this video is probably for you. Again, if not, just get out of here. But this is just me showing why 5 p.m. matters. So why does 5 p.m. matter in trading? So let me actually go to my major pairs. I'm currently up 59.6%. Okay, cool. So why does 5 p.m. New York time matter? So first, let's get one thing clear. So 5 p.m. New York time is a Forex daily close. 5 p.m. Yes, Eastern Standard Time is the New York daily close. So that means a new daily candle opens right after. So if you look at these what is this? Not this is horizontal. These vertical lines, each line is from 5 p.m. to 5 p.m. It might show up at 6 because I'm on Central Time and I'm an hour behind, right? So these lines from line to line is a whole Forex session from 5 p.m. to 5 p.m. That means a new daily candle forms right after, which is boom, right here. After the line, which is a new day. That means, so when price is approaching that close, I basically am watching the market to decide, are we closing above a key level? Are we rejecting and closing back below the key level? Or did we sweep liquidity and fail to hold? So key levels to me are the POC. And I'm going to do a full breakdown one of these weeks on the point of control, volume area high, volume area low, and just the whole volume profile period, because it's very, very powerful. But key levels for me are the point of control, which are these red lines that you see on my chart. And the reason why these are important to me is because price aims for these areas, rejects, and keeps going. So, and these can be areas of supply and demand. So as you can see, price went up, came down, rejected off of it, pushed back up. This is another point of control. This is another point of control. What did it do? Price came down, rejected off of it, and went back up. All right. So closing for me is proof. So once I get a close, I'm good. Wicks lie, close don't. So if I can get a solid close on a pair with some extra confluences, I know that I'm in there. And what I mean by close is price closed above the POC, and what it did, it ran. Price closed above the POC, it retraced, and then it ran. Price closed below the POC, but I don't have extra confluence to confirm that, you know, this low, right? But this probably wouldn't be a trading day if I was trading daily biases. Price closed above the POC, and then did what? It ran up, right? So wicks don't lie. Wicks lie, closes don't. So what the 5 p.m. bias means. So when I say 5 p.m. bias, I mean I'm using the daily close to confirm direction for either the week, the next session, or the next day. For me, I use it as confirmation or acceptance. You hear me say that a lot. Confirmation or acceptance. So if price takes out a previous week's high, what I like to see is a close below the PLC showing acceptance. The fact that price took out previous week's high and did not close below this PLC to show acceptance just lets me know that price wants to reprice higher. All right, so I'm not taking the trade. Yeah, I'm not taking the trade. So instead of trading midday noise, I let price close and I trade that confirmation. One, it does a couple of things for me. I don't have to keep watching the charts. Two, I'm off by 5 o'clock. So during work, I don't have to keep watching the charts. And all I have to do is after work, just look at my phone, see where I'm at, and then keep it moving. Point blank, period. So here's what I mark up on my charts before New York close. My charts are very, very simple. I just mark up the previous week's high and the previous week's low because I use weekly as liquidity. Granted, it takes a while to get there, but that's, again, that just works with me. That works with my trader style. I am a swing trader. Some people mark up previous day's highs. Some people mark up previous day's lows. Some people mark up Asia range, London range. Whatever works for you works for you. But I can guarantee you, you can use it on every time frame, every session, because volume, trading with volume, it's not a matter of, you know, smart money or anything, institutional traders. It just tells you where the great volume of people are trading in the market based off of the volume profile. And again, I am going to do a video on the volume profile. That'll probably be like 2 weeks from now or so. All right. So where is price closing 5 p.m. relatively to liquidity and QE levels is very important. So that's pretty much the core of my model, step by step. So again, what I do, I identify liquidity. I mark up the previous high, previous week's high, previous week's low. If price sweeps the high, price has taken out buy side liquidity. If price sweeps the low, price has taken out sell side liquidity. Those sweeps for me, in my mind, what makes sense are those are traps. Then what I'm doing is I'm waiting for a daily close confirmation in my respective direction. So this is the main rule. If price sweeps liquidity but fails to close beyond it at 5 p.m., that's a huge size of rejection for me. So an example that I can go back on, let's go to, and my sell limit, my sell limit to get executed is USD JPY. And this is a really, really good example, right? So boom. Previous week's high, previous week's low. Price took out previous week's high, and then it did what? It closed below the PLC. So off rip, this is where I'm looking for an entry. Boom, price hit my PLC, reverse down, and this is my target. Real simple, real easy, real clean. That is literally what I'm looking for. So if I go to AUD JPY, because I'm currently in on this trade, but I'm going to go to a different, well, it won't let me because I'm on. I customize it so I only see Owanda. I go to a different broker just to, you know what, let me just clean this chart up a little bit. So mark up previous day's high. And as you can see, previous week's high, price took out previous week's high. And it did what? Didn't close below right here, closed above, which is fine. Didn't close below right here, still closed above. But where did it do? It closed below the PLC right here. So entered in on that PLC, and as you can see, price is headed down to wherever it needs to head down to. Real simple, real easy, like ABC, easy as 1, 2, 3. You just have to wait on it and be patient, right? So I kind of already went into my step 3, which is my entry during the next session day with confirmation. So wait for 5 o'clock, and then I enter. However, I enter based off of candle close. Again, depending on what you're trading, again, I trade weekly levels. If you are a session trader, some people might enter in on only Asia session or London session or early New York the next day, you know, depending on the pair and the structure. So what I use for entering triggers, again, is just rejection off the point of control. Some people use a change of character, 15-minute break and retest, displacement move and pullback, or fair value gaps and imbalances. I don't do any of that. It's just too complicated and it requires me to think too much. Again, I'm very mechanical, so I just enter in off the PLC. But for me, the daily close gives me the direction in the lower time frame. The weekly kind of gives me the directional frame, and in the lower time frame, which I only use the hour, it just gives me my timing for my entry. So there's that. So just some quick examples. Let's say euro runs up during New York and takes out yesterday's high. Well, I don't trade daily anymore, so takes out previous week's high. Everyone starts buying, breakout, 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 right? Everyone thinks it's a breakout. However, but by the time 5 p.m. comes around, the market closes back underneath the previous week's high. So that just tells me that the breakout actually wasn't accepted, and everyone who was buying literally just got trapped out. So my bias would be bearish, thinking opposite of the regular retail traders, right? Because price swept by liquidity and rejected the next day. So next day I'm looking for sell rallies, not chase buy, and that's kind of similar with the DXY, where everyone's buying, buying, buying. Price takes out previous week's high. People can, buyers are still in control. Meanwhile, we're just waiting for that rally to close below the point of control to hit those reversals, right? So for risk management, and again, how I protect myself, my stops usually go above the sweep or previous day's high or low. And then my targets is always the opposite side of liquidity. So the previous week's high or low. Halfway to my target, close out half of my position. And that's pretty much it. So for me, or what I noticed, and I want to say the biggest mistake people make, the biggest mistake that I make is trading the movement before the close. I try to anticipate it before 5 o'clock, and then sometimes 5 o'clock hit and volume ends up shifting and it tricks me out. Because price can sweep both sides, chop around, and pretty much trick me all day, right? But when that daily candle closes, it's pretty much finalized, So and it's my final say so of, okay, did the market accept the level or reject it? Point blank period. So this video is going on 12 minutes. I'm just going to go ahead and close it out, wrap it up. So that's my New York session close, 5 p.m. bias strategy. Mark liquidity, wait for the daily close, let the close confirm direction, then enter next session with structure. So again, trade what you see, not what you think. If you want, I can do a part 2 where I break this down some more for you. And then, if this helps, drop a comment. 5 p.m. so I know you made it to the end, and I'll see you in the next one. No intro, no outro, straight fire.